This is NDTV and you are watching NDTV Prime.
Hello and welcome to the Property Show. You're with the West edition of India's pioneering real estate show. Our focus ensuring you take the best and the right decision with your property investments. The prominent markets of West India covered today: Mumbai, Navi Mumbai, Thane, Pune and Ahmedabad. And we have with us Sameer Jasuja, founder and MD Prop Equity, to identify the top picks in your budget backed with some solid data and research. So let's begin with the show lineup. Authorities plan a crackdown on 20,000 illegal buildings in Vasai-Virar region. But how did the buildings come up in the first place? Is this another Campocola compound in the making, and who's responsible for the mess? Next up, are Mumbai developers finally coming to terms with reality and bringing down prices? A check on what's on offer for the home buyers in this West market. Also, in a market where most investors seem to believe happy days for investing in property are over, especially residential, we get you special insights into making profitable bets with residential real estate. We go up next to cover prime micro markets of Mumbai. Budget here is a crore plus. Housing options in Thane is starting at 65 lakhs and going right up to a crore. And top 3 micro markets of Pune for homes that are worth your money. Best buys also in Ahmedabad in a very pocket-friendly budget of 30 lakh rupees. Our top discussion first. There was a time when every financial planner in the country encouraged you not only to buy a home of your own as early in life as possible, but also to look at buying your second property as an inflation-proof investment and a cozy earning asset before your retirement. Conversations at most get-togethers in Indian homes used to center around how much so-and-so has made in their property investments. Globally, high net worth individuals have been known to multiply their wealth by investing in smart real estate. But a lot has changed today, hasn't it? Real estate cycle in India is down and people are advised that this is only an end-user market, which means only if you want to live in that residential property, it's worth buying. No longer is such real estate a profitable investment proposition, is what we've been hearing at least for the last 24 months or so. So imagine our excitement when we get inboxed with an article from one of the most trusted voices in real estate titled "Creating Wealth with Residential Real Estate Investments." And we decided to dissect that on the show with a gentleman who penned this article, Anuj Puri, Chairman and Country Head, JLL India. Anuj, thank you very much for joining us. I mean, when I saw the title, I was so excited. I said, okay, let me see what you've written. So essentially, you believe that wealth can be created even today by buying the right price residential real estate. Explain it to our viewers how.
So it is true, Manisha, that for a long time now, say about 24 months, it appears that real estate, certainly on the residential side, is down and out. And if you were to speak with anyone and say that real estate is a great investment opportunity, I can tell you that they're going to say well, certainly not. And this is an asset class that they feel is untouchable at this stage. They feel was fraught with speculators, short-term investors, and it is a very dirty asset class. Having said that, it is the world's largest asset class. I mean, it's 3 times the GDP. And India, we know, is not an insular market. It's getting more attracted towards global. There are a lot of institutions coming into the real estate sector into India, and it is going to get professional. So whilst the human memory is looking at the last 24 months, I want to say is look at it over the last 60 months. There has been profits that have been made in this sector, perhaps abnormally, perhaps also wrongly by the speculators and the short-term investors. But equally, if you were to look at the global scenario and as an asset class, you cannot say that this is an asset class that I'm just not going to look at it. Yes, today it is down and under, but perhaps that is where the opportunity is. because that's when you actually start to invest. It is several times the value of gold, it's several times the value of equities, it is several times the value of debt at a global level. And as I said at the beginning, it's 3 times the global GDP. That's the asset values in real estate at a global front.
Okay.
So I do certainly feel, Manisha, that this is an opportune time to start looking at investment, certainly on the residential side, but there have to be a lot of caveats. And if I can continue, 4 or 5 very quick caveats one will need to look at it to make sure that you are investing properly. It has to be with the right developer. It has to be the right city. It has to be the right location. It has to be on a project where there is financial closure, and it has to be a project which has got full approvals. And that's where an astute investor should start to look at and start to invest.
So, you know, when you say that it has to be at the right location, at the right price point, how do you go out and hunt these deals? Because most of that stock seems to have been taken over. So either investors are sitting on it, so you get it from the resale market, but new projects seem to be coming up more further down where infrastructure isn't that great. So how would you really narrow down on what could be some of the winning markets?
So very good point, Manisha, and very pertinent. So, you know, given the way India infrastructure has expanded, I will not take or I will not book an apartment where the infrastructure hasn't yet reached. I mean, we've heard all these stories that the bridge is going to come in, the road is going to come in, the train is going to come in, the water supply is going to come in, the drainage is going to come in. But when it is going to come in, nobody knows. So I am not going to stretch that investment opportunity to take on the edge of the city. I would still want it to be in a locality which is well connected, has the social fabric, has the economic fabric close by, and that's where the location that I would take it, rather than say is that this is a futuristic location and let me take an apartment at that location, because that's where it starts to go wrong. Take an apartment, book an apartment, I would say in the primary sales, at a location which is already established, which has the social and the physical infrastructure.
So you're saying no forward punts, avoid forward punts, because infrastructure in India takes just so long. Okay, so I'm going to bring in Sameer here, because he's also been very, very closely in touch with actual buyers there, and also from the show we've got some insight. Sameer, there was a point when we did have people say forecast where the infrastructure is going to go and take a punt there. But I'm not going to delve or, you know, basically spend more time here. I'm saying, is there a thumb rule in terms of rental returns that you can get out of a real estate asset? What is it? How do you know it's the right price for any asset in property that you're getting into on the residential side? Should rental yield be the thumb rule?
Manisha, to begin with, first of all, add to what Anuj has said. Very pertinent points were made by Anuj. Just to add 2 more points, I think what is going to be driving real estate demand and pricing in the residential side going forward are going to be 2 more points. One is, most important, is the demand supply dynamics. Now, I can give you case studies here where in the last 2.5 years, properties worth 15 crores have touched 30 crores. Case in point, great developer like Anuj said, DLF, right product, Camellias, has gone up 100% in the last 2.5 years in the worst performing markets, precisely because of demand supply dynamics and employment generation opportunities. Now, if you look at just golf course as an example, there are 1 million square feet of commercial real estate that got ready with prime tenants coming in, or whether you look at some luxury real estate assets in Bangalore, luxury real estate which was high priced in certain micro markets has gone up primarily because of these 2 factors. In addition to what you asked, the pricing points, I think there is enough data now available in the market from many websites, from many brokers and companies such as ours, where you can actually now see how the price movement has happened over the last 2.5–3 years and what was the price 5 years ago. Now, if you couple that with the demand supply in that region, which is also very easily available, you can easily come to the right price point of any micro market and make a judicious decision, and you are bound to go right if you follow what Anuj just said and add these 2 more points. There's a tremendous upside still for going forward. Yes, the horizon should be not 1 or 2 years, but you can take it up to 5 years, and you can easily make a 10 to 15% compounded annualized return going forward.
Okay, seems like both of you are on consensus, even with the returns part of it, 15% over the next 3 years is possible. My question to you, Anuj, is in your article, Samir here mentions a couple of markets, and he's always had the knack of picking these markets where I'm sure he owns a lot of real estate, which have given you phenomenal returns, even being in luxury segment. Your article on the other side says, protect your downside and look at the 2,800 to 5,000 bracket. These are two, absolute opposite ends of the conversation, isn't it?
So it's a very good point, Manisha, and I'll try and explain. But I just want to reiterate one point that Samir said, and that was the last sentence that he said. Very, very important for those who are seeing your show, Manisha, that this investment is not a short-term investment. It's not a 6, 12 month. As Samir very rightly put it up, you have to look at a 4, 5, 6 year horizon. Don't think that I'm going to get in and then I'm going to get out in 6 months' time. Also, it is a illiquid asset class. It's not like a stock market. It takes time to monetize the assets. So those viewers who are going to get excited with what Samir and I are saying, Manisha, we just want to put in that caveat as well, that take the horizon as at least 5 years, not shorter. Samir is right when he says the premium, but it is also in the segments, Manisha, where there is very less supply of premium. So he picked up the example of camellias, or he referred to Bangalore. Very conveniently, Samir did not refer to Mumbai, where I'm sitting in, because this is a place which I can tell you, in premium, you would just not want to touch it.
Yeah, absolutely.
You just don't want to be close to premium unless you are an end user.
Okay, fair enough. So I would like maybe 3, thumb rules, because what I gleaned from your article, which was a really interesting point, say map out that it is at least lower than the 2008 level, the property that you're buying, right? So that's a good price point to look at, that it's not overinflated. It's below 2008 levels, and clearly over 5 years, it has more than 5 years, 7 years, it's actually available to you cheaper. Second, Anuj, what most experts tell me is that in India, the reason why real estate was so overinflated and was bound to come down was the rental yields on residential. And they were always very poor, and it was always a capital gains game, which is now ending. So if you are likely to get a 3.5% rental yield on an asset that you're going to buy today, it's probably the right price. Would you go with that? I mean, would you go with that thumb rule?
I would certainly go with that thumb rule, but Manisha, I can tell you it is equally very difficult today to say is on the asset that I'm going to buy today that I'll be able to get 3.5% rental return today itself. So what you will have to look at it is maybe 18, 24 months going forward, and expect that, at that time you will have between 2.5 to 3.5% rental return coming in from the residential. But buying it at today and then trying to see is whether I can get 3.5% on today's rental may be a little bit difficult. So, perhaps you'll have to look a little forward and then make your rental yield expectations.
Okay. Final question. Anuj said primary markets ideally, but with a lot of due diligence. Samir, you've always been saying hit the resale market. There's so much inventory available outside. Between the two, Samir, which one would you pick today?
Well, I would pick up most definitely the resale market, under construction market, which the investors had actually got into and are looking at exits. Anuj and I are primarily saying really the same thing. Go into the primary markets, but if the developer is not giving you the right price, you may just get the right price from an investor who's stuck over there. But primarily go into the primary under construction markets, not with projects that are just about to start, but projects that are midway through or nearing completion.
Anuj, is that so? Go with under construction project in advanced stages of construction, and primary or resale wherever you get, developer or resale wherever you get the best deal.
And it is true, and the reason for that is, Manisha, there is a little bit more confidence that at least the approvals would have been in place, at least the initial approvals are in place, and the developer has been able to bring the project to a certain level of development. The other addition that I would say is it's perhaps good quality developers, several good quality developers that you have across India. And for those developers who are just launching the project, I think it is still worth picking it up, because their reputation precedes. If the value at which they are launching is the right, I would pretty much encourage the investors to look at buying with those developers.
Except that I probably can count them on my fingertips, those developers.
Yeah, the problem is they're charging their premiums today because of their brands.
Absolutely. Yes. So sometimes, I mean, I would think that a hidden gem, a smaller investor who's got a great track record and fully funded, like you said, if you can find out the funding. I really think now is the time when developers, rather than coming out with beautiful ads of houses which look really swanky, would just come out with simple information disclosure ads saying, we've got our funding tied up, these are the people who are funding us, we've got all the approvals, these are the approvals in place, and hey, we promise you we'll deliver. We're not saying 3 years, maybe 4 years, but we'll give you a house in 4 years. Those kind of ads might probably generate more transparency and excitement in the market. Anush Puri, always a pleasure to have you with us. Thank you so much for joining us today.
Thank you very much, Manisha.
All right, we got to move on to a very, very interesting story now. Right after whether it's the right time to buy, I always believe, of course, when the markets are down in dumps is the time when you need to venture out. And look at what's happening in Mumbai. Slowdown has finally forced Mumbai-based developers to come face to face with ground realities. Reports are coming in of developers slashing prices and offering never-seen-before schemes to attract buyers. Well, is it time for you to start buying property again? Nikhil Narayan Sivdas also does some search on that question.
It's no secret that the real estate sector in Mumbai has been struggling. So far, developers have refused to cut prices, but that trend seems to be changing.
There is a marginal, adjustments that has been done in terms of pricing by many developers. In fact, across the, this thing, we have seen that, people have come down or managed to bring about a very sensitive or very sensible pricing, so that the people get opportunity to come and buy.
Developers in the western and extended western suburbs, including Vasai Virar, have started offering discounts of anywhere from 10 to 15%. Some of the bigger developers who don't want to openly offer price cuts are marketing their projects through special all-inclusive prices that are less than the market rate. One major developer, Omkar Realtors, is even offering an extra car parking slot in one of its projects.
First time we are coming with 2 BHK with 2 car parking, and that's also free. The second car parking is free. So customer will get the benefit in future.
The pricing strategy seems to be having some effect. Data from Knight Frank shows that sales in Mumbai in the first half of 2016 actually grew by 23% compared to the same period last year. Real estate experts say developers have finally realized that they need to focus on volumes and not margins if they want to survive the slump.
Developers are not finding enough buyers out there, and hence they are doing all these things. While mostly these things were restricted to the festive times or giving some discounts or price cuts only when there was a good reason for them to do. Today it is happening even without a reason.
However, experts also say that buyers should read the fine print. For instance, an all-inclusive price may have hidden costs penciled in, and that attractive price you're getting may not be as great, since some developers are offering this on pre-launch projects which could take a long time to complete.
Those are the projects which are at a very early stage, and as we know, there are not too many investors in the market. So basically, to lure the investors, such kind of pricing is being offered. But definitely end users will be little skeptical before going into this product at a very early stage.
Regardless of that, any move by developers to cut prices can only benefit home buyers. Now one can only hope that this helps reverse the real estate slump and bring the market back on track. From Mumbai, Nikhil Narayan Sivdas, NDTV.
Quick reminder to you, if you are planning on taking one of those great deals available in Mumbai markets, in fact, as we approach the festival season, in October, we have an early Dussehra this time. You might want to look at the great deals available in the market. And if you want a home loan, you have a home loan related question, write into us, property@ndtv.com. or just call us at the numbers on your screen. If you've got time before we go into a break to take this caller question, he's been waiting by very patiently. Ashok on the phone line with us. Ashok, hi, go ahead.
Hi, this is regarding my query, whatever I put. I need a flat in New Bombay somewhere in Ulve area in 55 to 60 lakhs. So have any property, so please suggest I can directly to the builder and approach.
All right. So directly to the builder, you're in a market where there should be plenty available from the builder. Sameer, the question is, he wants it in early 2017. His work location is Vashi. So he's saying 10 kilometers at best, if you can give me, obviously, because, you know, that would cut down his travel time.
Well, Manisha, we did speak with Mr. Ashok and we made him realize that within 10 kilometers will be very difficult given his budget. So we've got Panvel micro market, which will be right for his requirement with respect to size and budget, which is a bit, it's about 20 odd kilometers from his workplace, which is Vashi, but great amount of community living and gated communities coming up there and projects getting ready by 2017, which is the other requirement. Keeping all these in mind, that's the right micro market to go in with. Let's just look at the key.
Plus, there's at least a lot of infrastructure planned for better connectivity. I mean, it may take some time, but eventually it will happen.
Yeah, absolutely. And of course, the new airport is going to be a big boost for that region in terms of price appreciation as well going forward. Coming to the key data points of this micro market, 36 months of inventory overhang. It is understandable in today's slow going market. The mid segments trading at 5,300 rupees a square foot. Yet it's being able to maintain a price appreciation of about 7% on an annualized basis. The three projects that you can consider are Platinum Pride by Platinum Group. This project is a G+7 story project located in Sector 4. Project is only 900 meters away from the proposed NMMT bus depot, and the project is also 1.3 kilometers from the proposed Karanjade railway station. Connectivity is the most important data point that is required to be close to the project, which helps in the project doing better. So keep that in mind, specifically in Mumbai region. Sai Simran by Yashraj Group is the second recommendation, consisting of 3 wings. Project is located at Sector 4. Amenities here include a swimming pool, gym and some more amenities such as indoor games. Bhaveshwar Heights by Jai Shakti Builders. This is a standalone tower of G+12 stories located at Sector 6, Karanjade, Panvel. Here also amenities are basic only, they're just providing you a gym, but the developer is locally reputed. And project is 3.6 kilometers from the Panvel station and 4.5 kilometers from the ONGC hospital.
All right. So, well, there's also, you know, new CST stations proposed for this region. So I think connectivity per se is likely to improve for Navi Mumbai, and that should help in terms of crossing that 20-kilometer gap between the house and your workplace. Platinum Pride, Platinum Group, Sai Simran Yashraj Group and Bhaveshwar Heights by Jai Shakti Builders. When we come back, top budget buys in the city of Ahmedabad and an address that promises to bring sophistication and elevated lifestyle to Bulund. Vivati by Tata Housing is on our project tracker today. Take a look at what this project has to offer.